Hello, everyone. This is Jen. Welcome to our webinar and thank you for joining us today. Today, Cal is featuring Avalara and their tax solution. So we have a couple things to cover real quick. If you do have questions throughout the presentation, please use the Q&A box at the bottom of your Zoom screen. We'd love to hear what those are. I also am recording today's presentation, so don't feel like you have to take too many notes. We'll send out a copy to the recording and have that available for you in about 24 hours. The other thing is that we will be providing a gift card for lunch. Those should come after the presentation is over. So if you have further questions about that, feel free to reach out to us. In the meantime, thank you. We have Connor and Stephen from Avalara joining us. So Connor, you can take it away.
Awesome. Thank you so much, Jen. And it's good to meet all y'all virtually. Appreciate the time today. Just some quick intros of who's chatting with you from the Avalara side of things. My name's Connor O'Donnell. I've been with Avalara for 4 years now at this point. Um, I work specifically with our customers in the Acumatica ecosystem. So anyone who's either on Acumatica or transitioning to Acumatica, I'll be your point of contact for all things compliance automation solutions. And joining me, we have Stephen Park. Stephen and I have the exact same roles. Only difference is whereas I support Acumatica, Stephen supports customers who are in that Microsoft ecosystem. So the nice part, and we'll highlight this in today's conversation, is that Avalara, we're essentially agnostic. Our products are going to work identical between different ERPs. So the functionality that we'll showcase in today's demonstration, it's uniform across the different platforms. And talking about what we're going to talk about today. So here's a quick rundown of what to expect in today's webinar. Stephen is going to take the first half of it. So he's going to start by just laying out the solution, laying out the scope and the real landscape of modern day tax compliance. From there, he's going to go into Nexus, which we find is always a hot button topic when it comes to compliance, is understanding your Nexus footprint. There's a lot of different triggers of Nexus that Stephen will elaborate on. So giving you a little bit of insider information there. And then from there, after that, I'll go through and wrap up by going through our product solutions. So we'll lay out the landscape, we'll talk about Avalara's solutions, and then at the end, we'll open it up to any Q&A that y'all might have and get you out of here in maybe about 30, 40 or so minutes. So we appreciate your time today and looking forward to getting rolling here. So Stephen, I will pass it on over to you.
Yeah, absolutely. Thank you, Connor. Can you hear me okay? Just a real quick sound check.
You can.
Okay, perfect. Well, hi, everyone. I'm Stephen Park. I am the Microsoft partner for Avalara, and I'm going to go over a real brief lay of the land when it comes to tax compliance. So you'll have to bear with me. I know that speaking about tax isn't like building a race car or showing you something new and exciting, but this is something that has significant consequences to your business if it's done incorrectly. And so we can't avoid it, and it also poses a lot of risks. So I think it's really important to speak about, and I'll speak a little bit more about this later, but if there is a lot of risk and you're doing it wrong, it could end up costing you more than a race car. And so we'll talk about those challenges here in a little bit when we speak about Nexus. But when we talk about sales and use tax, why is it so complicated? What's happening? We see that there's a lot of folks on here that have different products, different services. Some of you offer a mix of products and services. Now, as you're buying from your vendors and purchasing inventory, purchasing services, that has a use tax associated with that. On the converse of that, you're selling these products, selling solutions to your customers. Now, all of those different products have different taxabilities, different rates that are applied to it. And of course, those change as you offer those services in different geographies. So there's a lot going on in terms of understanding what you need to be charging for taxes on your products and services. Now, in the US alone, we have over 13,000 sales and use tax jurisdictions. It's not by state, it's not by county. There's all kinds of jurisdictions available, not just by cities. There's special use taxes, there's special sales tax jurisdictions. We'll talk a little bit more about that, but just know that the sheer number of this is really what makes it complicated. On top of this geography is also your product taxability. So there's tax codes for every single product out there. Avalara is a software company. Our software is taxed differently in all of these jurisdictions. And I'm sure as you start to think about your own product set, you start to think about what you're offering as a business, there's probably a lot of different categories that those services and products fall into as well. So the combination of this creates millions of different ways to be taxed on your products and depending on where you sell. Why is this important? Really, guys, you all are growing businesses. You're trying to scale your business. And as you start to scale and you increase your scope and where you sell to, who you sell to, and what you sell, this gets even more and more complicated. So I'm going to bring up an example here. And this is the southern part of Denver, I would say. I'm really familiar with this area. I used to live in the 80232 area code. But some of our competitors use zip code as a way to figure out the tax rate of your product and your service. Here's a perfect example of why this doesn't work, right? You can see that in Greenwood Village 80111, there's 3 different tax jurisdictions. There's going to be 3 different tax rates applied to whatever you're doing. And I'm going to pick on, I believe incentive is on the line, and you guys offer marketing services. Your marketing services are going to be charged differently from a sales tax rate in all 3 of those jurisdictions, even though you're selling into the city of Greenwood Village into the same zip code. So really quickly, I love bringing this up because I think it paints a really nice picture, but this is the Colorado sales tax lookup site. Now, the state of Colorado has contracted with Avalara for us to run this actual site. And so I'm just going to show you a real life example of what happens when you're selling products and services into an area with different tax jurisdictions. So we're coming into Denver, and I don't mean to give you guys a headache, but I'm going to zoom in here. And so we're near the area, we're in northwest Denver, let's say. And there is Regis University here. It's all in the city of Denver, but I'm going to click on an area here just north of 52nd Street. And you're going to see the tax rate here. It's 4.75. That's a combination of Colorado sales tax, Adams County sales tax. And now you can see that there's special jurisdictions, the RTD Transportation District, so that runs the buses and the rails within Denver. They have a special tax, and of course, there's another special jurisdiction charging 0.1% as well. That leads to a total of 4.75% on your sales tax. If you just go across the street here, just across 52nd Street, that's going to change dramatically to 8.81%. So if you're selling your goods and services to the same folks across the street from each other, they're going to be taxed extremely differently. So it paints a picture of how complicated the sales tax environment can be within the same zip code, within the same city, and now you can see it's within the same street, really. So why does this happen? I'm sure you guys know the United States is a republic with a lot of autonomy for their states, and states like money. They really want to get their money. They really want their revenue. And sales, gross receipts tax, and use tax is a huge factor in the way they get their top line revenue. And so each state is going and vying for that piece of that pie, and not only states, but also cities, as well as these special use cases as well. So there's a lot going on, but at the end of the day, all of these governments, all of these jurisdictions are trying to get a piece of the tax pie so they can pay for the things that they need to pay for as well. So there's a lot of talk about Nexus, and I'm not sure if we have any sales tax or use tax experts on the line, but what is Nexus? And essentially, for you to be taxed all of these sales tax rates that we just reviewed, for you to be admitted to use taxes as well. For you to be eligible to be paying taxes in a state, you have to trigger what's called Nexus. There's a definition there on the screen for you, but essentially how I view it is it's a status with the state, it's a flag to a state. If you trigger Nexus and identify yourself as having Nexus, what you're telling the state is, hey, I do enough transactions or I do enough sales in your state to have to pay sales tax. And so you're raising that flag and letting them know this is what's happening. I will say it's not always you that raises that flag, right? And that's the risk that we run into. Sometimes it's an auditor, sometimes it's other people that are raising that flag for you saying, this company has done this kind of business for X amount of years and they're not registered and they haven't been paying sales tax. And so that creates a lot of risk and a huge problem for businesses because now not only do you owe back taxes, but you also owe penalties and interest on those taxes as well. So understanding Nexus and what that really means for your company in these specific states is extremely important to making sure there's not financial risk to your company. So we talk a lot about physical Nexus, and I think you all will be very familiar with physical Nexus. Classically, it's always been physical Nexus. It's where do you do business? Where is your office? Where are your headquarters? Where are your facilities? Where do your employees reside? That's been physical Nexus. Well, in 2018, there was a Supreme Court case, South Dakota versus Wayfair. I'm sure you all know Wayfair as the furniture seller that ships all over the United States, right? And you can get cheap furniture, expensive furniture, but they are shipping all over the United States. And so South Dakota was seeing activity through Wayfair, and they thought, it seems like they're doing millions of dollars of business in our state, but we don't see a single cent of sales tax. So they took this all the way to the Supreme Court, and the ruling was in favor of the state. And so this created a new type of nexus called economic nexus. And so even if you don't have a physical presence in a state, if you do enough dollar volume in a state or transactions in a state, you are now subject to economic nexus and you need to register and pay sales taxes in that state. There's a couple other ways to create nexus as well. I would say physical presence and economic nexus are the two big ones that we talk about, but there's also things like click-through and affiliate nexus. This is really applicable if you're doing things like getting referrals from a company that is not in your state, you don't have a physical presence in, you don't do sales in. You might be doing a lot of work with partners that are outside of your customer base, that are outside of your employee base, but they're creating a lot of business for you. Maybe you're doing a lot of trade show activity in the state that you don't sell into or that you don't have employees in. So those are some other ways to create nexus. I will say most of the time we are focusing on physical and economic nexus. Here's a few things that, here's a few thresholds that you can see throughout the United States. A good minimum, I think, to consider is really $100,000. If you're selling $100,000 worth of goods in a state, you might want to look at their thresholds and see if you're triggering nexus in that state if you haven't already registered. Now, that's really the minimum. You can see that there's no economic nexus in Oregon, in Montana, New Hampshire, and Delaware. Now, California, Texas, and New York, they're going to have a lot higher thresholds, but I'm sure you can predict they do a lot of economic activity. Those three states alone could be their own countries. So their thresholds are much higher. Also, every individual state has different rules on whether or not you need to hit sales transactions and sales volume, or if it's an either or situation. So you need to make sure that you understand how you're triggering nexus within each state. And of course, we can help you with that. The next thing to consider is exempt sales. So for me personally, and I believe Connor would be very similar for him, most of the clients that I deal with are selling mostly to exempt customers. And so they might not be having to look at tax rates all the time or applying tax rates all the time. But even still, a lot of states still consider exempt sales part of that transaction threshold and part of that dollar volume threshold. So it's still something that you need to consider. Most of the time, what I'm working with for our exempt sales customers is exemption certificate management, which is what Connor will speak about in just a little bit. But you also need to have an understanding of what your volumes are and what you'll actually owe in taxes. There's also the concept of use tax as well. So it's not just about sales tax, but it's also about use tax. And we can speak more about this in detail, but use tax essentially is you're getting taxed by your vendors, right? You're bringing in inventory, you're paying for services. Even though you might be an exempt customer yourself, you might be paying use tax. And that's another way for these states to get revenue, is that even though you're not eligible for sales tax, you're still eligible for a use tax. So it's another way for them to get money. We just had a case that we just studied, a case study of a customer that's come on board in the last year. They were overpaying their vendors on use tax by $1 million a year. And so what Avalara helped them do is go in and look at all of their accounts payable, where those accounts are coming from, where the inventory is coming from, where those services are coming from, and they're able to run an analysis on what that use tax should actually be and realize that they were overpaying by $1 million. So that's a significant amount of money that we need to consider as well. It's not just on the customer side, but also on the vendor side. So with that being said, I think there's a few solutions that can really help with everything that we just spoke about. Connor, I'm going to turn it over to you to present our solutions.
Yeah, absolutely. Thanks, Stephen. So hopping into it, so Avalara's product suite, if we progress to the next slide, can be broken up into a few different pillars, 6 to be exact. And so we'll walk through 4 specific products, but you can see here we have a whole host of different products available from you for sales and use tax calculations, filing reports, managing your exemption certificates, dealing with business licenses, and then getting into other areas that we have found from feedback from our customers that they want additional support in. So dealing with international sales, how to deal with VAT, how to deal with HST. We've also found a lot of feedback for additional compliance insights. So Avalara tax research. So what Stephen showed with the Colorado sales tax lookup, on the back end, it's calling to Avalara tax research, which I'll talk a little bit more about at the tail end of this presentation. So you can really see that at Avalara, it's not one size fits all. We'll take you through the sales evaluation process to figure out within these 6 different pillars, what's going to fit your need best, because you might not need all of our products. You might only need 1 or 2 or 3. And so that's where Stephen and I come into play, of understanding the specific needs of your businesses and then matching these with Avalara's products. So let's go into the tax determination suite. So Stephen, you can just go through all of them and I'll talk through the process flow. Perfect. So kind of looking at this, so I am visual. I really like this slide because it lays out how 3 of our products integrate together. Those 3 products being our tax engine, AvaTax, our exemption certificate management system, ECM, and then our returns platform, Avalara Returns. So if we start right at the center of this slide at systems, whether you're on Acumatica, whether you're on Microsoft, whether you're utilizing a point of sale system or an e-commerce platform, no matter where we're starting this journey for an ultimate tax calculation, we start here at the system. So I'm just going to speak to Acumatica because that's what I'm familiar with and what I've done for the past 4 years. So when an invoice is being saved in Acumatica or a sales quote is being generated in Acumatica, it's going to call up to our tax engine, AvaTax, through a pre-built integration. I'll note this pre-built integration is exactly the same for Acumatica as it is for Microsoft. So what I'm about to say is uniform across the board. And so when that invoice is flown up to our tax engine will pull apart the specifics of that invoice, looking at things like the ship to, the ship from, who this customer is to, what are the different line items on this invoice? Because I'm sure a variety of you have multiple different line items on an invoice. It's not going to throw our tax engine off. Our tax engine is going to look at all of these data points and then make a tax determination on each and every single line item on that invoice. From there, will apply any sales tax as needed, taking into account all the different jurisdictions like Stephen showcased, so the state, the county, city, and any special or local taxes, apply it to the invoice, and then push it back into your system, whether that be Acumatica, Microsoft, or a variety of different systems with that correct sales tax aligned. So all this is happening under a sub-second. It takes me longer to explain it than it does to actually happen. From your side of things, you're just clicking save on your invoice. Avalara is bolted into your systems on the back end. So there's no changes that you're doing in your processes. You're just invoicing through your system, and then we're aligning sales tax on the back end accordingly. But as Stephen alluded to, anecdotally, we talked with a lot of customers who are dealing with non-taxable customers. So Avalara as a customer and as a partner of you all needs to be able to make that differentiation between your taxable customers and your exempt customers. And so that's where the left side of this slide comes into play. So following that same exact process, the invoice is saved in your system. It flows up to our tax engine. Our tax engine will make a simultaneous call to our exemption certificate management system, again called ECM, to essentially answer the question, is this customer taxable or exempt? And how that question is answered is within ECM, we've uploaded all of your different exemption certificates that you have for all of your active customers in that system. And I kind of think of it like a Rolodex. ECM will roll through all those exemption certificates to say, hey, is customer XYZ, do they have an exemption certificate on file? If they do, great, this is a non-taxable customer. Don't align sales tax to this invoice. But inversely, if they don't find an exemption certificate, or if it is an inactive or invalid certificate, by the letter of the law, that is now a taxable customer, and our tax engine will then align sales tax for that invoice. So the nice part about these two systems talking together is this is all happening under a sub-second. Again, there's no manual oversight that you're having to do. It's just our tax engine talking to our exemption certificate management system. So once we've aligned sales tax to your taxable invoices and we've accounted for your non-taxable invoices, we of course need to remit to the states that you're registered in. And that's where Avalara can come in handy as well too, because our tax engine, AvaTax, right there in the middle of this slide, not only is it making tax determinations, but on the back end, it's storing any sales tax data that we've collected. So I'm located here in North Carolina. So if you were remitting the, we'll say July returns. If you were remitting, I guess August, August returns for the month of August in North Carolina, our tax engine is storing all of that August data in the platform. And so when it comes time to file those returns, it pushes that North Carolina August sales tax data over to our returns platform, where we'll then file and remit on your behalf. So no need for manual oversight, no need to download reports to then upload them to the different Department of Revenue websites. It's truly just two of our platforms talking together on the back end and then filing and remitting on your behalf. So that's how the process flow for Avalara for three of our products work. But we'll go a little bit deeper into each one. And so we'll first start with AvaTax. So like I mentioned, and I want to give you more information because a lot was covered in that last slide, but AvaTax, it has pre-built integrations into both Microsoft and into Acumatica. We are monitoring all 13,000 different tax jurisdictions across the country. So whenever those rates change or those boundaries changes, or let's say product taxability changes, let's say shipping in Arizona switches from taxable to exempt, our tax engine is monitoring that and making those changes in real time. And if you're currently managing sales and use tax on your own, you probably have either tax zones, as we call it in Acumatica, or just built-in tax rates into your system like Microsoft. The need to do that is now negated through Avalara because we're going to override the native functionality of your instance of Microsoft, of your instance of Acumatica. So now we're being the single source of truth when it comes to sales tax alignment, but also just sales tax rates, product taxability in general. Going into the ECM, or our exemption certificate management system, the nice part about this, again, it's if we're talking specifically to the Acumatica space, it's built in right into your Acumatica dashboard. So you're not having to flip between screens. All of this is being handled right then and there. So you'll now utilize our exemption certificate management system to bring on your new non-taxable customers. So if a customer raises their hand during your onboarding process to say, we're non-taxable, you would then send them their correct exemption certificate, one based off their classification. So are they a reseller? Are they a manufacturer distributor? Is it healthcare? Variety of different reasons for the classification. And then the state that they're located in. All you have to do is click two buttons. So click resell, click North Carolina. Our exemption certificate management system will then send them the reseller certificate here in North Carolina. Nice part about the system too is that it has object character reader, just a fancy way of saying that it can read PDFs and pull data from those PDFs. So we know exactly from pulling from that PDF when that exemption certificate is going to expire, if at all. And then we can automatically set up parameters to automatically request a new certificate before it expires. Because the tricky part about certificates across this country is that every state has a different rule for expiration. In North Carolina, they're good indefinitely. So once you get one, you're good to go. In Florida, they expire every year, whereas in Illinois, they expire every 3 years. So rather than you having to keep up with those different expiration dates for each of your customers, our system will do that on your behalf. The third product that we'll talk about here is Avalara Returns. Not much to say, and that's actually a good thing because it's truly just an automated process. Our returns platform is generating the data based off of our tax engine. So because our tax engine is accuracy guaranteed, our returns platform is also accuracy guaranteed. So it's just two systems talking on the back end, pushing data from one to the other, and then filing and remitting on your behalf. Now, I do always like to put the notion in there too that with automation, you still maintain liability review. You still can log into your Avalara dashboard and see how much we're going to be remitting in the states that you're registered in, just as a spot check, but there's really no need to do that. We find customers spot check a few times in the early months of their time with as a new Avalara customer. And then from there, once the trust is built, it's just a rinse and repeat. So it is quite nice in that regard. And the last product, we actually already got a little peek into it through Stephen, but is Avalara Tax Research. So Avalara Tax Research, think of this as our verified Google and Wikipedia for all things tax compliance. So I'm sure some of you have had to bear the burden of trying to determine how your products and services are taxed. And in doing that exercise, I'm sure you have looked at some tax laws or tax citations or tax codes that are listed online. And as you know, they're long, right? They make, think of a long book, the Odyssey. They make the Odyssey look easy to read. And so because of that, our tax research tool has taken all of these tax laws, tax citations, tax literature, and we give you yes or no answers to them. So for example, you can put in, let's say, raw materials. If you're working in the construction industry, you can put in raw materials in the search bar. You can click the state of North Carolina, and they'll tell you in yes or no terms, is raw material taxable in the state of North Carolina. You can get much more complicated than that. You can go into different questions about Nexus, about use tax, about drop shipping. No matter how complicated your question is, our tax research team is able to answer it because we have real people working on the back end of this. So if you want to ask our experts, let's say you have a follow-up question or want additional information, you can click contact the expert right within that search bar, and our team of researchers, who are all previous tax accountants, tax lawyers, will respond within 24 to 48 hours. So a really useful tool. Think of it like an outsourced accounting firm specifically for tax and compliance questions. It's very nifty, and it's one of our really one of our pillar products because it does offer so much conciseness to an industry that is so ambiguous. So those were the 4 products that we wanted to run through with you. So I know that was a lot to digest. Appreciate it. From there, I want to see, are there any questions? I'm just looking at the Q&A real quick. All right, so I'm going to answer Bethany's first. So Bethany's question is, how would Avalara know if the filing status changes? Do we need to maintain that? It's a great question. So yes, so you're ultimately dictating the parameters. So you need to, so let's say that in the state of Colorado, well, we'll use South Carolina. In the state of South Carolina, they switched you from quarterly to monthly because you increased the amount of invoices you have in that state. You would just simply go into your Avalara dashboard and you would switch that from the quarterly filings to the monthly filings. So that would be something that you would need to tell us, but it's an easy switch of going from 4 returns in South Carolina to 12 returns in South Carolina. The next question is Jason's. So on ECM, you mentioned, or if it's an invalid certificate, are you actually validating it in real time, or how, when, what do you need to do to actually validate it? So yes, so that's a good question. So 2 different options for you. We can either automatically validate it, so you can utilize our tool for validation purposes, or if you want to have that extra layer of let's say accountability by by validating it yourself, there is a review tab where you can review all incoming certificates. So you have 2 options of automation: full automation. Anytime you get a certificate, our system automatically will validate it, either deeming it valid or invalid. Reasons that I see anecdotally why they're invalid, maybe a lot of times it's signatures, like they don't actually sign it. Um, or if you want to get your eyes on it before validating, just as an extra layer of precaution, you can have the system set up where any incoming certificate is also verified by you as well. So validated by our system, but then verified by you before it is ultimately accepted into your system. So it's all about just the level of automation that you feel comfortable with as a user, but you do have both options.
Thank you, Connor.
Yeah, and thanks for your questions too. 2 really great questions. For Stephen and I's side of things, we'll follow up afterwards with our email, just in case that you are interested in chatting. Again, if you're in that Microsoft community, you'll work with Stephen. If you're in the Acumatica community, you'll work with me if you are interested with compliance automation. But again, we got one more too, Teresa. Do you recommend a Nexus study prior to beginning to use Avalara for other services? If a study determines additional state registration reporting is needed, how do states handle prior years? That's a great question. Quick answer, yes. Think of Avalara. We are taking the parameters based off you. So if you don't do a Nexus study, we are assuming that the states that you're telling us that you need to be registered in are the only states that you need to be registered in. The Nexus study verifies that hey, if you're registered in 5 states now, but you actually do need to be registered in 7 states, so we need to increase and add 2 more states. We want to know that, not only just for compliance purposes, but also for quoting, because we are a usage-based company. So it does matter in which states, the number of states that you're registered in, that ultimately does dictate your quote here at Avalara. But yes, we do recommend that, especially if Nexus is a concern for you or if you're a growing business. It's a really great way to understand exactly in which states you need to get registered prior to talking software. And then the second part of that question was lookbacks. Our Nexus study, based off which one you do purchase, will either do a 1-year look back or a multiple year look back based off, there's 2 different options, either standard or premium for risk assessments. Ultimately, either one works. I do find a lot of folks just do a 1-year look back. That does uncover any additional outstanding liability or back taxes that need to be addressed before you get registered and enter into that state.
Connor, can I add to that actually? Teresa, if you have concerns about Nexus and registering and back taxes, that's something that we would find out pretty quickly during our process, Connor and I's process. So if we get volumes from you and we see that you're registered in North Carolina and Connecticut, but you do $1 million worth of sales in Colorado, then we're going to have further questions, right? So we want to know, how long has that been going on and why aren't you registered? If it comes to that there's a lot of financial risk in back taxes, what we can do is Avalara can go on your behalf to the state of Colorado and say, look, we have a company and we don't mention your name and they owe significant amount of back taxes. Can we have a relationship where we pay you a portion of that, and then moving forward, we'll get them registered and they can start paying you sales tax? And so they'll agree to that because a little revenue is better than no revenue. And so that way you're protected. It also limits the amount of look back that the state auditors can have. And we call that, what do we call that, Connor? Sorry.
It's our voluntary disclosure agreement, or VDA for short.
VDA, yep, voluntary disclosure agreement. And so that really limits the amount of risk that you can have within that state. So if you do have concerns about that, absolutely, Connor and I can help you with that.
I wanted to take a moment too. We have a current customer, Denise. They have an Acumatica system and they use Avalara. And we were hoping maybe she could just talk to the group a little bit about her experiences. Denise, are you there? I clicked on allow you to talk.
Can you hear me?
Yes, great.
Okay.
Thank you.
Yes, we went on Avalara about, I think it's about 3 years ago now. And when we did, we're about a third of the size of the company that we are today. We live in the accessibility space, home accessibility, stair lifts, ramps, and some other things. So we have a giant mix of, we do sales tax in some states, use tax in other states. We have exemptions. We have prescriptions that we can get that exempt tax. It's pretty complicated. And once we got the initial implementation done, really, it's kind of like set it and forget it. And for any of you that have set up tax categories, zones, new branches, new states in Acumatica, it can be a little complicated when you don't have a tax solution. We currently use AvaTax, Avalara Returns, and Avalara Tax Research. We do not use ECM, but it is a great product as well. And I will say that for me, taking that manual maintenance out of tax rates and all of those things that come along every month from different tax agencies, Avalara Tax Research, for example, every month I get an email telling me about the early access tax rate changes that I can look at and see if there's anything I need to communicate to my team, but there's nothing I need to do manually in our system to make those tax rates accurate. We recently acquired a company, made us grow by a third more. So they do business in Colorado, and to Connor and Steven's point, that state can be a little complicated. If I had to maintain that manually, I would be really, really, really hard pressed to be able to do that within Acumatica manually. And I just can't say enough that I just love the set it and forget it aspect of once you have all of your setup done, that you don't really need to worry about it. I think it's awesome.
Thank you so much,
you,
Denise.
Thanks, Denise.
You're welcome.
All righty, y'all. Well, we appreciate your time today. Any final T's and C's from the marketing side of things before we hop off here?
No, and no more questions, so we can follow up with people afterwards. Thank you to both you guys for taking your time out and giving a great presentation.
Thanks for setting this up, guys. And yeah, thanks everyone for participating. And yeah, absolutely. We love the questions and it's been great for us. So appreciate the time.
Thank
Everyone
you.
have a good rest of your Wednesday.
Thanks, everyone.
Bye-bye.
Bye.